entire market structures, entire models on which the markets are built. It's on a thesis that risk can be diversified. So we talk about valuations, we talk about portfolio construction, we talk about so many other technical aspects in investing. Entire thing is built around how do you diversify risks that can be diversified away. In the sense, so for example, let's say I'm an investor in an auto company. So one of the key risks for autos is, let's say, petrol prices. So I could invest in an oil company to diversify. Let's say I'm an investor in, say, a power company. So there are two things there. There is one side, there is a consumer and there is a supplier. So I could diversify those risks away by being part of the whole supply, whole value chain, or away from that. So if I'm invested in, say, thermal power, I want to invest in, say, renewables, or I want to invest in nuclear or whatever. So multiple ways I could diversify. So diversification is the core of this entire financial markets discussion, entire the risk reward equations. So it is not built on. So a lot of times when we talk to investors, so the theory that we work with is not built on concentrated investing. It's not built on investing significant portion of your wealth in one particular business. It's always about what can be diversified. You need to diversify. So whatever risk. So the crux of investing is diversification, and that is available to you. So as an entrepreneur, when I look at it, so right now, if my business needs capital, every excess capital gets into it. There is always a provision for the family in the sense that the family has to be ring fenced. So there is a plan where I'm de-risking the family from whatever I'm doing. And at some point when this business throws up more cash, I would be investing more outside of my business than inside my business. Not from any other angle, because the business may not need cash. That's one. And I need to diversify my holdings. So again, diversification. So what is diversification? So let's say if I have to take an example. So I know Mr. Vignesh runs a paper business. Now, investing in a paper company or a packaging company, a paper company is not diversification. So let's say they are in the business of dealing in paper. Investing in a paper manufacturer helps him. It's more an integration than diversification. A lot of times, what we do is when as a business owner, we understand our business better than any other business. So typically, what we do is our portfolio outside of our business also reflects our business. So let's say one of the reasons I'm running this business is I expect financialization of savings. Now that cannot be the thesis on which I can invest outside of my business. Let's say if the thesis fails, so I'll get it would hurt me both ways. Both my business would get affected and my portfolio would get affected. So if you talk to some of the large family offices, when I say family offices, we have very large family offices in India today. Many of them come from a IT services background. So one constraint that they have, clear constraint, is they will not invest in IT services business, because that's the key. That's the core. That's their core holding. So you talk to the Premji family office, or you talk to Narayan Murthy's family office, they will not invest in IT services business. They will invest outside of that. So the whole crux of that is getting a diversified exposure to multiple other things. Like I said, but the, the wealth gets created in your business. It needs to be managed outside of your business. So think of it in two ways: where you create wealth and where do you manage wealth. If you look at this is I will name the company later. So if you actually look at it, right, for 16 years, so the black one is the company, and the yellow one is a broad-based index, diversified index. If you really look at it, for 16 years, the company didn't generate return. And it's one of the largest companies. All of us use their products. So you might be running a great business which has a great product which is widely used across continents. But still, if you see, for 16 years, the company didn't give you any return. So running a small business, how do we think our wealth can grow in that period? And let's say, for whatever be the reason, you have a family need. Sometimes in this period, you would be selling your, like family silver, you would be selling your business at a price at which you will not be comfortable, or you would be borrowing against it. So if you see, there could be long periods that any given business, it could be yours or it could be anybody's, or it could be the best of the businesses. It could go through long periods of what I would call as lack of value addition, zero value addition. zero market value addition. So this is Microsoft. For 16 years, Microsoft didn't add value. So its market cap, so from between 2000 peak and 2016, there was zero price movement. They might have paid a few dollars in dividend this side, that side. But if you actually see, there was no return to shareholders. It took 16 years of zero return. So if you are running Microsoft, let's say you are running Microsoft and you have a family need, you need to create a portfolio outside of that. So that other one is a broad-based index. So this was in a short period of 15 years. So see, in investing, again, people talk about short, medium, and long. So for us, it's like even as an entrepreneur, 15 years is a short period. So as from a personal finance perspective, 15 years is a short period. You need to plan when we work with clients and plan their finances. So you have 30 years of working life and 30 years of retired life. So we are talking about a 60-year period. So 15 years in that framework, 15 years is a short period. So whereas if you look longer, Microsoft created significant wealth. So although for 15 years it didn't create any wealth, beyond that, if you wait longer, that's why if you wait longer, Microsoft did much better than the market. So the question, the key point here is you wouldn't know when your business will create value for you. So it's the best business, you run it, but it could take much longer than you anticipate before you really generate positive returns. So one way to do that is, take your money, take the surplus, whatever you make, consider investing outside in a more diversified approach. So this is something that we missed. So even in this 15 years, there were other assets, non-equity assets, which did very well. So that's the fifth axiom. So should you just stick to equity, or should you do more than equity? If you see this green one is gold. In the same period that Microsoft did nothing, where index did about 40% in 15 years, gold did about 400%. So that introduces the other concept of asset allocation. So essentially, as an entrepreneur, you need to diversify. See, you are an equity owner in your business. So add other equities to your portfolio and look for things outside of equity. And again, the same thing in the long run. If you see, it's pretty much on par with what a good quality equity made. But again, so it's not that it's going to repeat. It's just how it did in the last 23 years. So look beyond your business, look beyond equities, create a more diversified or a risk managed personal portfolio outside of your business. So this is something. This is the last one. This is the last slide. So essentially, own business, equity in your own business, equity outside in a diversified portfolio, plus other assets. Should how one should look at your broader portfolio. So again, this is my one of my favorite quotes and one of my favorite investors. So whatever we do, no amount of sophistication is going to allay the fact that all our knowledge is about the past and our predictions about the future. So whatever we talked, whatever examples I gave is about what happened in the past. But that's not something, there is nothing like, it's going to happen again in future. But the broad point is, the broad takeaway is, you will, I will create, from my angle, I will create wealth in what I do. Surplus wealth, I would be creating a more diversified equity portfolio and I would be adding other asset classes to that. Thank you.
And we have question answer section. We have the dignitaries on the dais, so we can also sit and
Business is a capital hungry business, and you need to allocate capital to the business. How do we diversify despite the fact that we would not have enough capital to invest?
So a capital hungry business should be able to borrow money. See, borrowing, see, why, while we kind of, as investors, we kind of say the borrowing is not great. But if you are a cyclical business, if you are a capital intensive business, you should be able to borrow money. And your return should be in such a way that you can service that debt. See, the whole idea of, see, the best thing to happen is, people say the best innovation is ETFs, but the best thing to happen is the tax deduction that you get on interest. So that's one of the things on which capitalism is built. Right. So essentially, if you see, if your business is capital intensive, if your business needs capital, it should come from multiple sources. One source is equity, the other source should be debt. So you cannot say that you cannot say that I wouldn't borrow money to run my business if it is capital intensive and it has you are creating assets. But if it is capital intensive and it is something which is not, let's say, asset light, so this thing is dichotomy. This is ironic. So you cannot have a capital intensive business which is not creating assets. Something like what we see today in the startup world, where
Yeah, it is better. It is better.
so the other side of this capital intensive business is where, what we see today in startups, they are raising so much capital, they are not really creating assets. They're creating categories. They are creating, largely spending money in acquiring customers. So if your business is something where you need to invest intensively without creating assets, then you should be worried about that business per se.
My business actually, because we are lending, we are giving credit to our customers. We are not creating any assets there. But it's a capital intensive business. Working capital cycles are going up. So our capital necessity becomes higher as we increase our sales.
This is so. In your case, in that case, right, what you should be looking at, figuring out a way to get them credit outside of you. So is there a way you can create work? I mean, rather than you providing working capital, if they you can there is trade as in, like, there is materials goods in trade. So is there a way you can create a working capital facility without you being affected? See, credit culture is prevalent today. It's not like what we had in, see, I started my career as a banker in 2000. So just after dot-com crash. So markets peaked in March 2000, and I started in April 2000. So if you go back and see credit, and India was in that period where interest rates were about 17, 18, 16% for corporate borrowing. And over a period of time, they significantly reduced. And it will continue to reduce. So if you can figure out a way your customer can borrow, you can assist him, or you can uh, get him cheaper credit. I mean, there are multiple ways, the invoice discounting,
I'll tell
whatever.
you. Okay, that's one way of doing it.
So there are multiple. So if you can create it, that would be great. So you cannot lock your capital in your client's business.
Uh, See, I understand where we come from. Because uh, to some extent, my understanding is that most of these distributors or dealers, more than selling the product, they are in a way they are money makers. The product selling the product is incidental. The buyers buy the product from them at a very thin margin, but the rate of interest charged is built into it either or it is charged separately. That's what happens most of the time. Glorified financials. It's a glorified financials. So I don't think that can be resolved by. It's a part and parcel of the business. Still, I think that there will be something which we will be able to take out of the business and like this. Make a painful decision when the business is doing very well and you need more money and you never try to take out the money. That's where the challenge lies. When it is doing very well, only you should take out the money and diversify it. That is right.
So that's where, like, what Warren Buffett says, right? Be greedy. be fearful when others are greedy. Essentially, when you are doing very well, you need to take. So, see, your business is the most riskiest asset in your because it's you.
Yeah.
There is a human risk as well, right? So, without you, can the business run? We don't. So, so that's true with me also. I don't know if my business will run without me as of today. So, although I try to create structures over a period of, it will take some time to mature and run without me. So, so the biggest risk in any entrepreneur's wealth is his own business. So, how do we get out of this? We can only get out when things are doing great. Take money out whenever there is an opportunity. Because see, whether there is an opportunity in the markets or not, we do not know. But there will always be some opportunity somewhere. Like somebody said, there is always a bull market somewhere.
Yeah, Vijay, in my experience, what I have noticed is that there are three types of uh, problems faced by self-employed and entrepreneurs, businessmen. Either the business is always hungry for more capital, which is largely the case. And then when it does well, the business has more capital than it needs. Uh, Entrepreneurs are very comfortable with the second and only uncomfortable with the first situation. Now, only if the person ensures that his business is reasonably capitalized, quietly capitalized. The capitalization is a position of a business more than size, sale, turnover, profit. We see all these things. We are not taking money from others. Small businessman doesn't take money from other people. There are no other shareholders, only mostly family or friends. So you have to actually ensure that the correct level of capital is maintained, and that capital always is ready for the next year and at least. No, it should be adequately covered. This and what you are saying about investment, try and connect it for our benefit.
So essentially, that's what. So in my own case, right now I'm at an early stage. So see, every business has a life cycle. So there is an early stage when it's a fledgling business where it requires that capital. So whatever I have, so like Sam said, it's all family savings that we have put in, and it needs more capital. Then we go to friends. So in the initial phase, it's very difficult to seriously diversify. But again, in the initial stages, let's assume so. I started when I was 41. So even if I'm employed, I have about 18, 19 years to retire. So even in my business, I probably think about retiring at 70. It's 29 years. So the way I think about this is the early stage is not going to throw up cash. It's going to consume capital. It's going to break even at some point. Break even again at a level at which it throws cash for me to sustain the personal expenses. It's still not, and my personal expenses includes retirement plan. So my personal expenses includes what I'm going to put aside for a retirement. So essentially, the business doesn't throw cash in the first few years. So that's the early stage of a business. Then it matures. So in classic management theory, we have this cycle, like early stage growth, maturity, and then there is a decline. So what you need to do is when it is maturing, you need to plan for the decline. So early stage, it is so for me, it's going to be impossible for me to diversify very much today. But as this business grows and matures, that's when I should, if it throws cash, I should be taking out and preparing for a period when it's declining. So every business will go through that. Every business will decline. So I don't see if 2 years ago the kind of businesses that we had, how many of them really are present today? A, either they are there is capital misallocation, or B, the business itself goes that the need of the product itself is not there today. So every business will go through that. So you prepare. So when you thrive, you prepare for a period beyond that. Every business will go through this cycle. And some businesses may come back for the next cycle.
See, that brings, I have, அதில் எனக்கு ஒரு கொஸ்டின் என்னன்னா, I'm in this business for over 30, 40 years. I'm doing this business. அந்த பிசினஸ்லயே நிறைய டிசப்ஷன் வருது, சேஞ்சஸ் வருது. I'm not able to handle it, or I fear that I may not be able to handle it, so I have to diversify. And I diversify into equity. That is somebody else's business. I don't know. So என்னோட பிசினஸ்ல இவ்வளவு ப்ராப்ளம் இருக்கும் பொழுது, that how do I place trust on somebody else's business, somebody else's idea?
This is where diversification, even when you create it, you don't invest in one business. So that's why you create a diversified portfolio. See, some things will click, some will not. So let's say you typically what I see is 50 to 60% if you are succeeding. Equity as the biggest thing about equity is not compounding. The biggest thing about equity is asymmetry. You invest 100, it can go to 10,000 or 100 can go to zero. So you lost 100. So if you get 60% right or 50% right, you will still have uh, higher than average returns. So, so you create a portfolio which is not dependent on one individual or one business, one particular line of activity. So you create a diversified portfolio outside of that. So see, trust is the most difficult thing. And see, as an entrepreneur, I run this because I think I can do better than somebody else. So I need to. So every entrepreneur thinks in a similar way. So you need to see the whole the bedrock of capitalism is trust. Because so a capitalist takes money from banks, he takes money from investors. So if you cannot trust him, then there is no point in putting.
But I'll add one more thing to that. See, the first question I asked is that, I mean, when I'm not confident about the future of my business, I invest into somebody else's business. That's right. So, ரெண்டாவது பிரச்சனை you mentioned that the risk tolerance or risk perception businessல வந்து mine will be different, my families will be different. Typically, I see most of the business families நல்லா சம்பாதிக்கிறாரு, எல்லா பணத்தையும் திரும்ப பிசினஸ்லேயே போட்டுட்டு இருக்காரு, பயமா இருக்கு. ஸோ அதே பயமா இருக்கும் பொழுது the risk perception of family, especially the radius in Tamil Nadu மாதிரி ஏரியாவில் பார்த்தீங்கன்னா, not in every home, most of the home, equity investing is found to be even more dangerous or risky. So how do we bring them to the same platform? என்னோட businessல பண்றதே they are objecting or they think that I'm taking a very big risk. Now taking them deep, that's also this risk.
Add one point before you ask. But just one follow on to that, your earlier question. For example, I am also into finance business, everything related to money. So when I am doing equity investing, as far as possible, I try to avoid in finance companies, even if it is equity investing, because I know, okay, it could be a systematic risk. Something happens to the money also goes down and the equity also goes down. And one more person told me that I invest in only in money. Say, of course, receive is in paper. He say that I invest only in paper, but I understand paper better. So now what to do?
That's what.
So that is why I introduced that last slide, which was wisdom gold. So essentially, if you see our traditional wisdom, so when I talk to some of the very senior folks, uh, we have always followed a certain portfolio allocation. So if you talk to them, they say, so 20% goes back to my business, 20% goes into expenses. So they have some thumb rules where they diversify in the sense, it is not diversification. So 20% goes into expenses, 20% goes back into my business, 20% goes back into bonds or deposits of in other businesses or banks or whatever. 20 gets into equity, and to keep the lady happy, 20% into gold. It's essential that there is harmony at home. So I mean, in a very rude way, I say this: I buy my house that some mother-in-law invests. That I bought my home to keep my mother-in-law happy. So if my mother,
Many people buy a home to get a mother-in-law.
Otherwise, you can't get married. That's right.
so I would not, if I didn't have that home, I would not have been allowed. They would not have allowed me to start what I was doing. I'm the first generation. My dad used to work in BHA. So my father-in-law was in government service. So if I had not done, if I had not purchased that home, if I had not kept my wife happy, so her risk tolerance is she needs a roof over her. Whatever growth options I can present to her, 20 years எப்படி இருக்கும் 20 வருஷத்துல எப்படி இருக்கும் அதெல்லாம் வந்து இட்ஸ் அ பிச் சேல்ஸ் பிச் ஸோ அதுக்கு வந்து அவங்களை கன்வின்ஸ் பண்ணனா சரி இதெல்லாம் நீ நோ பண்ணிக்கோ பட் ஐ நீட் திஸ் ஏபிசி ஸோ ஐ ஹவ் டு சாட்டிஸ்ஃபை தட் the first thing I did was, ring fence. Of course, she's not a co-owner or anything. Apartment is still in my name, but it is still that she thinks that okay, there is a home, and it's not in Chennai, it's outside. So it's like, so she said to that extent she was happy. So beyond that, do whatever you want to.
Actually, you brought out a lovely point that the entrepreneurial people love their business more than anything else in their life. You're a businessman, your love for your business is higher than your love for everything else in your life. So, if your business needs something, you will drop everything else and give the capital, your time, attention, everything to the business because you're hoping that it's going to give back something very, very large later in your life. What he brings out is a very fascinating aspect that once you stabilize a business, I don't know whether that got communicated correctly. Once you stabilize the business and it starts, generating something, then you have to stabilize your personal finance. You have to stabilize your family finance, your own equity. So these two silos are sitting next to each other. They're not exactly connected. So you have to move from one silo to another silo. That is the point which I think is uh, very, very valid, especially for entrepreneurs. Which I generally feel entrepreneurs don't do. When he mentioned about these failed companies, most of the failed companies fail to do this. I will, at the risk of naming, I will name a industry, not a name of an entity. They were just pouring money in negative working capital business. I'm talking about the food business, eatery, the hotel. It's a massive chain and throwing money, and yeah, they have to pay their vendors later, and then they get the money upfront. Every morning the money comes in, but even the vegetable payment is on Saturday or month end or whatever. It's not immediate. They're making so much money. Tell me how this kind of a business where you're having lakhs of people eating every day, footfalls, capital is given to you before you pay it out, right? But otherwise, it's the opposite. But these businesses fail more. If you see, you see all the hotel entrepreneurs of Tamil Nadu, all have failed. You see the bus transport. First, the ticket is bought, then only petrol, diesel is spent, then only EMI is paid. But all these guys have failed. Their negative working capital business is the people have failed. The reason is that they don't understand these principles which he's telling, which is where these principles are very, very valid, especially when you're coming up. Because once you get into that habit, no, you're not going to check the habit that is going to save you. There's no chance of your making that mistake after you say. Oh, so he says no that you have to have correct asset allocation and he has to put the money in places where you can access it. Most people, when they make more money than they anticipate, don't have a strategy at all. They don't have an advisor, they don't have a strategy. So, what they do is, once you suppose you are making money hand over fist, every month you are making 1 2 crore profit. People will come to you asking you to do this, do that. We want to see this property. We want to do this. We want to put this insurance policy like that. So, these people are getting so much money, they don't pay attention to where they're doing the capital allocation when that money is coming in. So, they put it here and there. They no return at all. They only talk about appreciation. They don't even put in a place where they can get any return. Yeah, very illiquid and very speculative in fact. So when they need the money again, suppose the business goes down like they had COVID, then they are not able to raise the money. You will all remember one very large chain today. No, I'm talking about hmm, you can't say that I mentioned that, but I'm talking about a very large retail chain, okay, in India, which went bankrupt post-COVID. It is now gone. Now Reliance has taken over everything. The same problem. Perennially undercapitalized. Promoter lost almost all his wealth.
The other thing is all these businesses are also cash. So if you run a business where you handle in cash, deal in cash, that's it's you need to be very careful about what kind of leakages, what kind of controls you want to have.
They kind of don't respect it enough. That's all I would say.
Essentially, it's like see, wealth in India is a new phenomenon. So in the last ஒரு 20 வருஷத்துல தான் வந்து India has thrived. So அதுக்கு முன்னாடி வந்து even now we are capital scarce. அதுக்கு முன்னாடி we were much more. Every resource was a scarcity except manpower. So wealth இப்பதான் first time even entrepreneurs பார்த்தோம்னாக்க இதான் first time நம்ம பார்க்கலாம். So it's like I wouldn't say they don't understand, but they don't appreciate a lot of finer aspects. So இப்பதான் next generation பார்த்தோம் அப்படின்னாக்க next generation வந்து classic examples of well managed businesses are in Chennai. The way they train the next generation is in Chennai. The way They train outside of their organization. அவங்களோட business வச்சிருக்க மாட்டாங்க. They will go and work in a place outside their business, get trained for a few years and come back. It's not that they don't understand or anything. It's just that the control. See, there is a lot of in the small and medium enterprises வந்து நிறைய வந்து they work on trust. So trust over processes, trust over controls. So அந்த controls இருக்கிறது. ஸோ அந்த கண்ட்ரோல்ஸ் வந்து இப்போ லெட்ஸ் சே சிம்பிள் ஹோட்டல் ஒரு டீ கடையை எடுத்துக்கோங்க, எல்லாமே கேஷ், ரைட்? எவ்வளோ உங்களுக்கு அங்கே வந்து என்ன வருதுன்னே தெரியாது. ஈவன் பில்லிங் எல்லாம் இருந்தாலும் எண்ட் ஆஃப் த டே தான் உங்களுக்கு தெரியும். எசென்ஷியலி திஸ் ஆர் ஆல் லைக் அண்ட் லீக்கேஜஸ் வந்து எங்கெங்கெல்லாம் வரும்னு தெரியாது. ஸோ தெர் ஆர் நோன் அண்ட் அன்னோன் லீக்கேஜ். சில இடத்துல வந்து நமக்கு தெரியும், அவங்க வந்து பண்ணும்போதே வந்து இந்த பர்டிகுலர் இது தெர் இஸ் அ ஓவர் பில்லிங் ஆர் வாட் எவர். ஸோ அதனால அண்டர்ஸ்டாண்ட் கேபிட்டல் அப்படின்னாக்க we place more value on trust and relationships, which has worked out well at a scale. அந்த ஸ்கேலுக்கு மேல போகும்போது you need to bring in control systems into a company.
So basically, when you look at in Tamil Nadu, still business fails because of working capital. Whether it may be due to
Sir,
the
not
negative.
even Tamil Nadu, sir. Every business fails because of working capital. Every business. நீங்க இதுன்னு இல்லை, நீங்க அக்ராஸ் த கண்ட்ரி அக்ராஸ் த வேர்ல்டு பாத்தீங்கன்னா ஃபர்ஸ்ட் ஸ்ட்ரெஸ். அதனால தான் சொல்லுவோம் ஃபர்ஸ்ட் ஸ்ட்ரெஸ். ஏர்லி வார்னிங் சிஸ்டம்ஸ்லாம் how do you look at as an investor? What do you look at? பேலன்ஸ் ஷீட் அங்க இருக்கும், பேலன்ஸ் ஷீட்ல ஒன்றும் பெரிய சேஞ்ச் வராது, ஒன்றும் சேஞ்ச் வராது. ஸோ வேர் டு யூ சி த ஃபர்ஸ்ட் ஸ்ட்ரெஸ்? யூ ஆல்வேஸ் சி ஸ்ட்ரெஸ் இன் கேஷ் ஃப்ளோஸ், ஒர்க்கிங் கேபிட்டல்.
ஐ நோ ஒரு துணிக்கடை, பெரிய துணிக்கடை, பிட்வீன் பிரதர்ஸ் ப்ரொக்யூர்மெண்ட் வாங்க போறதெல்லாம் ஒரு பிரதர், அக்கௌண்ட்ஸ் பில் பேமெண்ட் செட்டில் பண்றது எல்லாம் ஐ சீன் இட். நான் அது பார்த்துருக்கேன். இவர் வந்து குஜராத், பனாரஸ், கல்கட்டா அங்கெல்லாம் போயிட்டு துணி வாங்கிட்டு வந்துருவாரு. 2 months கிரெடிட் ஆர் சம்திங். நார்மலி ஒரு எண்ட் ஆஃப் த செகண்ட் மந்த் பேமெண்ட் பண்ணுவாங்க. ஒரு 10 ஐட்டம் வாங்கிட்டு வந்திருக்காங்க, அதோட பில் வந்து 1 lakh. இதுல எவ்வளவு வித்துருக்குன்னு கேட்பாரு. 1 lakhல 60,000 வித்துருக்குன்னா இவருக்கு கிவ் பேமெண்ட் ஒன்லி ஃபார் 60,000. 40,000 பேமெண்ட் கொடுக்க மாட்டார். அண்டர்ஸ்டாண்டிங் இஸ் 2 months. தேர்ட் மந்த் கொடுக்க மாட்டார். There will be a tremendous pressure from the vendor to the other brother who went and bought. அடுத்த தடவை இந்த பிரதர் ரொம்ப கவனமா இருப்பார். He knows what moves very fast in the market. He will check with the floor, top floor, எது ரொம்ப மூவ் ஆகுது, எது மூவ் ஆகல, மூவ் ஆகுது சரக்கு இது ரெடியூஸ் பண்றது. அதர்வைஸ் இரஸ்பான்சிபிள். ஃப்ரீயா கிடைக்குது சப்ளை, 2 months 3 months வாங்கிட்டு வந்துட்டு தென் இதை ரிட்டர்ன் பண்ணணும் அல்லது டிஸ்கவுண்ட் பண்ணணும். So there is a very effective control measures they have on this, and they sometimes fight over it. He says, I will not make any payment.
But the same way to your this other person, when you say that you're giving money to the retailers, you're not getting the money back. The same logic is explained there. And in the sense that you can't get the loan from the wholesaler. It's not you bring the money.
We'll have to pay the vendor upfront. So
I can't whether you can get it.
So,
Like what is it?
இப்போ ஒரு சப்ளை செயின் எடுத்துட்டீங்க சார், என்டையர் சப்ளை செயின் நேட்டிவ் ஒர்க் கேபிட்டல் இருக்க முடியாது. இப்போ ஒருத்தருக்கு நேட்டிவ் ஒர்க்கிங் கேபிட்டல் இருக்கு, either வெண்டருக்கு பாசிட்டிவ் இருக்கணும், இல்ல உங்களோட சப்ளை உங்களோட கஸ்டமருக்கு பாசிட்டிவ் இருக்கு. The chain will be flat. செயின்ல இருக்கிற ஒர்க்கிங் கேபிட்டல் only be the profits of the entire chain.
ஒரு சைடு நெகட்டிவ் இருந்தா இன்னொரு
இன்னொரு
சைடு
side
பாசிட்டிவ்
positive
இருக்கும். அதானே, ஒருத்தருக்கு காசு இல்லாம பிசினஸ் பண்ண முடியுதுனாக்கா அப்ப இன்னொருத்தர் அந்த காசை கொடுக்கணும். அவ்வளவுதான் விஷயம். எல்லாருக்கும் காசு இல்லாம பிசினஸ் பண்ண முடியாது. இன்னொன்னு, ஒரு இடைத்தரகர்னு சொல்லும் போது, அதாவது 2 பிசினஸ்க்கு நடுவுல ஒருத்தர் பிசினஸ் பண்ணும்போது அவருடைய ஸ்டாக் இன் ட்ரேட் வந்து ஒண்ணு யாருக்கு தேவை இருக்கு, எவ்வளவு தேவை இருக்குன்ற அந்த நாலேஜ், யாரால சப்ளை பண்ண முடியுங்கிற அந்த நாலேஜ், இவர் என்ன விலைக்கு கொடுப்பாருங்கிற அந்த நாலேஜ், இவர் என்ன விலை கொடுத்து வாங்க ரெடியா இருப்பாருங்கிற அந்த நாலேஜ், இது எல்லாம் தாண்டி இவர் சொந்த காசு.
Because it's too limited model. They have the customers.
Because
They get into the
because all the products because they have the intellectual property called a brand. All the products they buy is a commodity. All the products they sell is a branded product. So there is always a perennial demand for the products they sell, and there is not so much demand for the product they buy. So they have the power equation in the middle because they own a brand. So I will give you an example. There are mobile showrooms, okay, or TV showrooms. There used to be. They used to have so much control over customers 10 years to 20 years back that the TV manufacturer would give some credit to them. Slowly the equation changed. Okay, so at one point you have control, people come and give you credit. Okay, but it stops. For example, in car, dealer only creates the sales. Sir. Motorcycle, dealer only creates the sale. But dealer puts the money upfront, sir. He doesn't get credit from the manufacturer. Yeah, the only reason a dealer is the business is because he is putting his capital in the
A couple of things. One, you mentioned that the business with the city and growth, but whereas the son would like prefer to go for, I would like standard. Is it to know the change in the lifestyle? Have to know the hurdles in the business? Is it a mentality of the youngsters?
That's more of freedom mentality. Why should I come under my dad? Gets controlled. So he is happy getting controlled by his boss, some other fellow, but not by him.
This is happening across. Again, that even if you look at larger businesses outside Tamil Nadu also, the next generation very rarely wants to be part of the legacy businesses. See, I have sold in the private equity. Like so there was a period when I was innocent banking. The next generation they had a manufacturing business. This was 2004-5. So the family had a manufacturing business. Monopoly. ரொம்ப சிம்பிள் ப்ராடக்ட் இந்த சோடா முடி பண்றது. The company was based in Bombay. There are only two people, one in Calcutta, one in Bombay. They are monopoly for இந்த ரெண்டு பேர் வந்து duopoly for the entire South Asia. The next generation was not interested in running that business. ரெண்டே தான் பெப்சி அண்ட் கோக் இவங்க தான் பண்றாங்க, வேற யாரும் கிடையாது. No competition. So private equity saw that okay, as long as glass bottles இருக்கிற வரைக்கும் இந்த business போகும். But the next generation was interested in retail trade. So they wanted to sell this, take that capital and develop retail businesses. So car dealership. So what they chose was car dealership. So அப்பதான் Toyota was coming into India. So they wanted to be Toyota's one of the bigger dealers for Toyota. So the entire business was sold. They became a car dealer. So next, so it's a choice. See, one of the things I keep telling in the own industry, that succession cannot be forced upon the family. So succession has to be very natural. Now succession is also about handling the clients.
You mentioned about the startups in one of your talks. So, as an investor, one you may interested in putting in money in startups. What are the key things you as a
அதாவது எப்படின்னா ஸ்டார்ட் வந்து there are two types சார். இன்னைக்கு எல்லாம் எந்த ஸ்டார்ட் அப் தான். See the point is என்ன, இப்போ முன்னாடி ஸ்டார்ட் அப்ஸ் இருந்தது. ஸோ எப்படின்னா முன்னாடி அதை ஸ்டார்ட் அப் நம்ம சொல்லலை அவ்வளோதான். இப்போ 90s there were a lot of new businesses. இப்போ எல்லாமே வந்து ஃபர்ஸ்ட் ஜென்ரேஷன் அந்த பிசினஸ்.
Infosys was startup.
Infosys was strong. Entire IT services were startups in 90s. பட் யாரும் அப்படி இதை சொல்லலை. இன்னைக்கு வந்து ஸ்டார்ட் அப்ஸ் அப்படின்னாக்க இன்னைக்கு இந்த அமெரிக்கன் மாப்பிள்ள மாதிரி அதை ஸ்டார்ட் அப் பண்றோம். ஸோ ஷுட் யூ இன்வெஸ்ட் அப்படின்னா ஐ வுட் சே லைக் கொலவெறி இருக்கலாம். அதான் சொல்றேன், ஸ்டார்ட் அப்ல இன்வெஸ்ட் பண்ணா கொலவெறி இருக்கலாம், தற்கொலை இருக்கக்கூடாது. ஸோ யூ நீட் டு பி வெரி கேர்ஃபுல் அஸ் டு வேர் யூ ஆர் புட்டிங் யுவர் இது பண்றீங்க, என்ன இதில் பண்றோம்னு. சி பர்சனலி பார்த்தீங்கன்னா ஸ்டார்ட் அப்ஸ்ல வந்து the returns are not, நீங்க ஸ்மால் கேப் இன்வெஸ்டிங் போயிடலாம். lot of இல்ல இன்னைக்கு it's a market cycle, right? So you cannot make a philosophy based on what is happening today. Investing philosophy has to be more long term in nature. So would I go to a startup or something which is well managed small cap company which can become a mid cap, it can become a large cap. So we have multiple stories of small caps becoming large cap. So startups the mortality rate is very high. The systems and process are yet to be it has to be established. So why should I even look at? Say, I won't look at startups. See, it's a fund that we were was part of. So அங்க வந்து we were a late stage investor, not a public market investor. So pre-IPO பண்ணுவோம். 1 year before IPO, 2 years before IPO we will do. When we see visibility. So இல்லைனாக்க we invest in public markets. So there is enough opportunity. 6,000 company இருக்கு சார் public market. There are enough opportunity. It's just today it's expensive. So 3 years ago startups, 2 years ago startups were expensive. ஸோ மார்க்கெட்ல வந்து ஏதாவது ஒரு இடத்துல அந்த ஒன்று எக்ஸ்பென்சிவா இருக்கும், ஒன்று சீப்பா இருக்கும். ஸோ வெதர் ஷுட் யூ இன்வெஸ்ட் இன் ஸ்டார்ட் அப், யூ ஹேவ் இன்ஃபர்மேஷன் அசிமெட்ரி, உங்களுக்கு என்ன நடக்குதுன்னே தெரியாது, டிஸ்க்ளோசர் இல்லை. ஸோ யூ ஷுட் ஐ டு நாட் நோ யுவர் பேக்ரவுண்ட் when I'm saying this. See, unless you have significant amount of capital, don't commit into startups.
Maybe you'll have one separate discussion on that with some interesting how to
they have a lot of
startup team. If you meet them, they explain many of these team of people there. Indeed, in fact, your annual second, CEO is coming in and listening. See, you're asking இந்த ஜென்ரேஷன் அல்லது இப்ப இருக்க ஜென்ரேஷன் வந்து அப்பாவோட பிசினஸ் சக்சஸ்ஃபுல்லா இருந்தாலும் அந்த பிசினஸ்க்கு வராம வேலைக்கு ஏன் போறாங்க 1.5 லட்சம் ரூபாய் வேக் வாஸ் மென்ஷன். ஒன் மோர் ரீசன், இன்னொரு காரணம் நான் பார்க்கறது என்ன அப்படின்னா பியர் ப்ரெஷர் அண்ட் ஒர்க் என்விரான்மெண்ட். என்னோட பிசினஸ் இப்போ கும்பகோணத்துல நல்ல பிசினஸா இருக்கும், இல்லை துணி கடை நல்ல கடையா இருக்கும். என் பையனுக்கு வந்து இங்க ஒரு இன்ஜினியரிங் முடிச்சுட்டு கேம்பஸ்ல பிளேஸ் ஆனா யூ வாண்ட் ஒர்க் என்விரான்மெண்ட் லைக் ஃபுட்போர்ட் இருக்கா முதல்ல. எங்க அப்பாவோட ஃபுட்போர்ட் கிடையாது. It may sound silly. These are all the things which they look at. Lifestyle, very important. At least not for him, but for his wife. கல்யாணம் பண்ணிக்க போறேன்னா she needs to be in such a ecosystem. So then once after 3-4 years, 3-4 வருஷம் 5 வருஷம் ஆனா then they will realize இதை விட அங்க இருக்கணும். They normally switch over. Most of them they switch over. And freedom is also, that's a very important thing.
It's a good thing to start in a more established setups. ஏன்னா you get exposed to lot many things. இப்போ நான் வந்து இப்போ வந்துட்டு let's say my son is very young, 7 years old. 20 or 15 years age or whatever, and he is completing his college, or if he wants to come in, I would prefer him to work elsewhere for few years. அதுக்கப்புறம் let him make his gain experience in terms of handling. Without முருகப்பாக்கெல்லாம் பார்த்தீங்கன்னாக்கா most of the youngsters they work outside before they get into the group, and it's good to know practices outside. இப்போ for example நீங்க இது வந்துட்டு இப்போ go to கோயம்புத்தூர், there is this IT park சரணம்பட்டின்னு ஒரு இடத்துல. So the family that owned that land which sold to develop that IT park, the family ஓட பையன் வந்து he works in that in one of the IT companies there. So essentially வந்து என்னன்னா it's a much larger and much more legacy. இது என்னன்னாக்கா it's a choice they make. அது வந்து we cannot build anything as an entrepreneur. I cannot build anything expecting my son or daughter to be part of this journey. I have to build with an expectation that somebody else will take over after me and run. I may have equity interest to continue.
Interesting because the business has to seven else can also be.
So, see, that is what இப்போ நம்ம வந்து இன்வெஸ்ட் இதில் தான் நீங்கள் இன்வெஸ்ட் பண்ணும்போது நம்ம சொல்கிறோம் இல்லையா, we say when we invest in public markets, public companies, we say we look at all these factors. We have to benchmark ourselves against that. நம்ம என்ன சொல்றோம், இந்த கவர்னன்ஸ் ஸ்ட்ரக்சர்ஸ் வேணும்ன்றோம், இந்த மாதிரி கார்பரேட் கவர்னன்ஸ் சொல்றோம், இந்த மாதிரி மேனேஜ்மெண்ட் குவாலிட்டி சொல்றோம், மேனேஜ்மெண்ட் பேண்ட்வித் எல்லாம் சொல்றோம் இல்லையா. ஸோ அதெல்லாம் இருந்தால் தான் யூ திங்க் தட் திஸ் கம்பெனி வில் சர்வை. ஸோ நம்ம இண்டிவிஜுவல் பிசினஸும் பார்த்தீங்கன்னா we have to benchmark against the same thing at various levels. So whether when somebody else is looking at my business to invest, you will also look at the way I look at other businesses. So do I qualify for this checklist? நான் முதல்ல என்னோட ஓன் செக்லிஸ்ட்டுக்கு நான் குவாலிஃபை ஆகும். So if I build it that way, then there is a possibility that the next generation may be interested, provided yes they have basic interest in what I am doing.
Okay, sir.
I had an example of Microsoft, 15 years of dormancy. Similarly, it has happened in Indian market also. Hindustan Lever, ITC.
So எல்லாமே ஆகலாம் சார். அதுதான்
Is there any model by which you can identify such type of companies who will come out or will break out of this?
Listen, sir, this talk is not about market investing. The idea is even a well-managed business, a large franchise, and a globally used product can go through such periods. So, as a small entrepreneur, as an SME entrepreneur, where do I stand in that perspective? The idea of that chart is not to figure out when it will break out. The idea is to convey that even such businesses can go through long periods of lack of returns. So, when we are running small businesses, so can we think our business will keep throwing cash, generating value, creating value year on year? அதுதான் அந்த தாட்டோட பெர்ஸ்பெக்டிவே தவிர just to say that even well managed large multinational businesses can go through such phases. அது எப்படி வெளியே வந்ததுன்றது it's a different totally different perspective.
Would example the Yes Bank and the investment happened in.
Yeah, you'll take back.
So now, as we are discussing that many businesses need more capital, okay, or there are businesses that the business is stable, cash flows are coming in, but there is opportunity to grow more by diversifying into more locations or increasing the customer base. So in those cases, is it a good point to bring in an investor and diversify our own business and take out money little bit diversify from our
So,
business.
so if you have an ability to sell your business, right? Sell as get an investor, right? So then you have reached a certain point. So then what do you do with the money? That money, if you can sell, see there are two parts to selling. Selling as an external capital. Either you sell your stake little bit or the money comes into the company. Depending on like Sham Sonamari, it needs to be rightly capitalized. See, more our இன்னொரு point in most companies which has taken external capital failed because they had more capital than what they need. So if you take right amount of capital from external sources and you have the right levers to growth, you should take it. And you should also, if you have scaled up, say let's say you have been running it for 15 years, so you have scaled to a point. You should also get some exit so that you are de-risking. You should de-risk as well as grow. So you should also do a secondary sale. So let's say 2-3% of whatever, whichever is needed for the family. See, the idea of diversified thing is at two levels. One, ring fence the family first, then create a bigger diversified portfolio. So see, the எப்படின்னாக்கா you need to work in phases. ஒவ்வொரு ஃபேஸ்ல ஒவ்வொரு மாதிரி இருக்கும். Like early இப்போ is my personal finance perfect today? No. Because whenever I need capital, I'll take money from my savings. There's absolutely nothing I can do about it. So once it reaches a point where இது வேண்டாம் அப்படின்னாக்கா, then I will ring fence. First level. Then அதுக்கு மேல வந்து then I start selling my stake. So see, on the stage and the journey of an entrepreneur or entrepreneurship journey also is very different at different points. So how do you reduce your risk? Getting new money or selling it to unselling.
Thank you, sir. We had a very wonderful session. As a token of our gratitude, HCC would like to honor today's speaker. May